following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from optionpit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Grigas from Options Express.
Welcome back to the Option Block, and I hope all of our listeners had a happy and a fun holiday. We're still coming up on the end of the year, so there's still more fun to be had. And I'm joined today by the usual cast of characters, starting off with center square for the win, Uncle Mike Tusaw. Uncle Mike, how are you doing today? How was your holiday?
Went well. Kids got spoiled at Christmas by the grandparents, and a lot of fun. So it's one with all the grandparents in the equation this year, and with two kids, I need a vacation from my vacation, I think.
Yeah, it gets that way after a while. You're drowning in wrapping paper and all kinds of fun stuff. What was the big gift at the Tusaw household this year?
Grandma and Grandpa decided to get my son and my daughter together for their birthday and Christmas a snowmobile.
Really?
What? Oh, yeah.
I thought your kid was like 2.
Well, 3 and 1. The 3-year-old's able to ride it. It's designed for his size. It technically says 6 and up, but we're, I guess, a little bit different in the Tusaw family. We're a snowmobile family, and it's pretty neat in that it's easy to drive. You just have to basically, I don't know, for those of you that have never driven a snowmobile before, you don't have to shift or anything like that. You just put your thumb on a button and it goes. Gas on one side, brake on the other, basically. And at that age, it involves my son driving and dad running. So I have my workout plan all set up for the next couple of months, basically. But it was a lot of fun and very tiring chasing him around as well.
That's crazy. You know, I thought I was nuts, and my mother-in-law, your cousin, John, gave me a hard time for getting my little guy who just turned 2 a little handy-manny powered quad thing he could ride around the house. You know, one of those little like 6-volt things. She thought that was crazy and too much for him, and he loved it. So I'm glad to hear that someone else was even crazier and got you snowmobiles.
Yeah, I think when you have a son, like you're really gung-ho to kind of get them going right away. Having a son who just turned 4, I think we've done the same thing in our household over the past 2 years.
Yeah, and it's why I can still run as fast as the snowmobile can go, but there's a governor on there that hopefully someone doesn't play a trick on me and adjust for the next time that I go and take him out on it. But for now, I can still run as fast as the snowmobile, and that's basically what I do.
Yeah, that's hilarious. Of course, eagle-eyed, or I should say non-tin-eared listeners may also recognize the other voice joining us today, and that, of course, is John Grigas himself, the major domo, the big man on campus over at Options Express. John, how are you doing today?
Holidays were good. I had some time off, spent it with the family, and I could say I'm glad to be back at work. So I think, hopefully they're not listening, but, you get 5 interrupted days of your immediate family, and it really does make you appreciate what you do, for the other 350 weeks a year. But Christmas went well. I understand why China's doing so well, because everything underneath the tree was plastic and from China. We did attempt to get a guinea pig, and I discovered yesterday morning that I'm allergic to guinea pigs and broke out in hives. So turtle it is. So we now have a turtle at our house instead of the guinea pig. He only lasted about 48 hours.
That's fantastic. Your hives from the guinea pig. Wow, so snowmobiles and hives. I think mine.
Now, what was the big gift at your place?
My Christmas gift of the handy-manny powered quad seems pretty tame in comparison now. People thought I was crazy giving that to a 2-year-old, but it seemed to work out pretty well. He's already driving fairly well and wreaking minimal havoc on the house, so it's kind of nice. So with that, we will dive right into the trading block.
The trading block.
And welcome to the trading block. It was another relatively mixed day today on light volume. We had the S&P up pretty much unchanged, not even a point. Dow down about 20 points. NASDAQ up about 1.5. And the VIX up about 7%, up VIX cash up about 1.19 points. So a little bit of bump out there in the cash, or the VIX anyway. Probably about time. Probably should be seeing a little more of that over the next coming months probably. And it looks like a lot of the activity today, what there was of it, was primarily driven by China mixing things up with their interest rates again. They're jacking up their rates in order to prevent the inevitable onset of inflation over there. I mean, that country's been growing like mad for years now, and I mean, a lot of people have been watching for the signs of rampant and inflation, and it is starting to show up over there. So China taking a proactive step that seemed to damp down the market a little bit today. We also saw light volume, as I mentioned, because everyone in the back east is snowed in today, so they can't even get down to the trading floor even if they wanted to. So no one's putting up any numbers back in New York today. Pretty light day. I don't know. What did you guys see today?
Yeah, I mean, if I don't know if you guys saw this memo as well, but the softs markets that only trade in the pit for futures options actually had a late opening this morning, something I haven't seen in a long while. Instead of opening up, some of them open around 8, some open around 7 Eastern, opened up at 11 Eastern. So some of those, pits were only open for about 2 hours today, which is very uncommon. But yeah, overall, very quiet. We had some foreign markets that were still closed today. Dow down 20. What I did like to see, though, is the futures this morning were down 40 to 50 points, and the Dow at its low was down, I think, about 60 points. So overall, it was a good comeback. Could look for some more upside tomorrow. What about you, Mike?
Nothing can kill these freaking bulls. They keep coming back stronger and hungrier than ever. Nothing can damp their enthusiasm for this market these days.
Yeah, eventually we're going to have to take our medicine at some point. I mean, with an interesting note I thought on the snow, the Giants played in Green Bay this weekend, and the Jets, of course, played in Chicago, and they couldn't fly back. So both teams, they got beat, and they couldn't fly back the same night. They have to just stay in the town with which they lost an extra day, and I imagine that's not a lot of fun for them. But in regard to the markets, I mean, it's eventually something's got to give, and no tree grows to the sky, but I'm not going to be the one to stand in the way of this bull, that's for sure. The fact that China raised rates and then, like John said, we drop down and then we come back on a day-to-day when almost no one's trading, it seems, that's still, the bull is very much in charge. There's no doubt about it.
Yeah, there's just no stopping him anytime soon. It seems like all these current fears we have percolating, and everyone's worried about Spain and more issues coming on over there, and it seems like there's so much on the horizon, yet the bulls just continue to devour this market in every way, shape, and form. I know, John, you mentioned the softs. What else did you guys see out in the old commodity land today?
Well, we had hoped to see, with the raise in the People's Bank of China, that we'd see a lot of commodities sell off, that would slow down the growth in China, and that, initially that's what happened. Some of those soft markets like cotton and cocoa did sell off. Like I said, the futures options had a late or a delayed opening this morning, but the electronic markets for futures itself continued to trade. There was no delay and no pause in trading for those markets. We did see an early sell-off in reaction to that type of interest rate raise, but they rallied, like our market, back into some unchanged territory or slightly lower. So that, maybe they thought 25 basis points, maybe not enough. I think before they raised rates today, they raised them about the second week of October, and before that, they hadn't raised in 3 years. So maybe the market was expecting a little bit more. I'm hearing from the Forex side of things that that the raise was already built into the markets.
That same thing you're seeing over there, Mike, in gold and silver land?
Yeah, I mean, gold, it's what both of them had relatively flat days today when you look at it. Even on the silver side of it, it didn't really, the low of the day really wasn't that low is maybe down about 1%, and that's kind of a boring day for silver these days, it seems. And on the gold side of it, the low, like I'm just looking at GLD right now, it was down about 50 cents, and now it's up about 40 cents on the day. So there really wasn't a lot of action with either gold or silver during the trading days at all. So I think it was probably factored in as well.
I did hear that copper made some intraday highs, which is something to note. That I know copper's been in the news lately. I think there was a holder across the pond that held a percentage that was greater than the majority of the physical copper. I don't know what that number is off the top of my head, but for them to hit a new intraday high, that could be opening up the ceiling to more gains in copper as well. But like Mike said, overall, just a muted market today.
The bulls just can't get enough of the metals, it seems like.
Yeah, I mean, it's if you're bullish on equities, I guess you're bullish on commodities. They're kind of linked at this point. I think Tucson was chiming in something about Cisco today, breaking that 20 handle. I think it broke it pretty handily, didn't it?
Yeah, it closed at 2020 today. So Cisco is actually something to where it's kind of been on my radar for a while, ever since the bad announcement a few weeks ago. And I said that once it closes above 20, we're going to start to look to get into it. And that's something to where they did today. And so right now, I think Cisco is a good fundamental stock for the long term. Obviously, consider your risks and objectives before investing in anything. But with that, for some of our clients, we're going to start looking to get into Cisco here over the next couple of weeks.
So Cisco has finally hit your trigger, huh?
It has. And I think like what I'm looking at, it's in, I guess, kind of in what we call the workshop stage right now. And that we're looking for ways to get into it and manage risk. One thing that I'm looking at right now is some type of possibly like a ratio combo. And I don't know what we're going to do yet. I still have to play with this a little bit more. But what we're analyzing right now is, let's say that you could sell a 20 put on it and then perhaps buy two for every 1 20 put that you sell. You can buy 2 21, 23 call spreads, and I'm talking 4 to 6 months out. And whether that's the case or not right now, I don't know, but that's kind of what we're looking to do, something along those lines, to where we want to get a little bit more upside for a little less risk and control the risk. And after all, I'm fine owning Cisco at around the 20 or 19 level anyway, and if we have half that much risk, that's something in the right section of the portfolio, depending on the client, depending on the goals and objectives, it might be a good thing for them.
Yeah, it's not bad. You finance your long-term bullish stance on Cisco with some near-term put selling.
Mike, what do you think the upside potential is of Cisco?
A long-term hold, I think that it's, I think it could outperform the market. What I'm trying to set up right now is something to where we have half the risk for all the reward in comparison to just doing a straight covered call against it. So, I mean, I could see it going to the mid-20s over the course of the next year or so. So that's kind of what we're looking to do on it for right now.
Yeah, it's got that nice gap at around 23, maybe even 24. So it does look like, it's a lot of technical people will say that I'd like to fill in that gap, before it makes another move lower. So maybe that's a possibility.
I was going to say, this is one to where, fundamentally speaking, I think it's a good company. And with it this low, it's been pretty stable now for the last month and a half, tinkering around the 20 level. And it's above 20 again. And I don't want to go all in by any means. I never want to do that on anything. But I could definitely see this going up over the course of the next year.
I do own one of those Cisco flip cameras. And I got to tell you, they're pretty neat. And the customer service, because I had some problems with it early going, has been pretty good. So I guess maybe they have their, like Options Express, they have their customer service down pat.
Cisco's a weird beast these days, because for years they were a primarily enterprise market. They were a lot of the back end of the internet was built by Cisco, and in the last few years they made some acquisitions like Flip that have brought them more squarely into the consumer realm. In fact, if you watched anything over the past month, Cisco spent a ton pushing the Flip. They were really aggressively advertised. They were on the homepage of Amazon every day. In fact, I finally joined the Flip Club as well. I got one for my wife. It seems to be the perfect ladies' jeans front pocket type of camcorder.
It is, and it's user friendly. It's like pop that button, USB comes out, you plug it in your computer, it starts to download it. I mean, it's really idiot proof. But I'm sure there's some people out there that still have trouble figuring it out. But we've had ours for a year now, and it's enjoyable because you're not taking that half-hour, 45-minute film of your kids opening gifts. You just take a 3 to 5 minute film. And that's really all you need to see.
I mean, Cisco's back-end enterprise stuff is still doing fairly well, but some of the stuff like that with I've been a little hesitant, even though the market and everyone and their mother has been very bullish on Cisco and then selling a lot of downside 19 puts and buying upside calls after they dropped after their earnings earlier last month. It seems like, I don't know, I mean, for the consumer end of their business, how much future is there in a flip standalone camera when every single smartphone on the planet is getting 8 and 10 megapixel cameras and high-def video in them pretty soon? I mean, I got a flip for my wife to use because it's something she would use, but I always use my Droid X whenever I'm out there. It has a high-def camcorder built into it.
Yeah, no, and so does I have a HTC Evo, so I'm with you on that. But the quality it doesn't even compare as far as the flip to your cell phone. I know they both say 720p, but the quality is so much better on the flip than it is on the smartphones. That's what I've noticed.
I agree. The quality is better on a standalone device. I'm just kind of, as these things progress, how much longer will that be the case? How much market share will Flip maintain in the age of every single device having built-in stuff? What's the future for Flip? Are they going to start licensing that? And then the other question then is how big of a percentage of Cisco is Flip these days? I mean, they spend a ton on it. That's a big chunk going forward, but I think they're still primarily enterprise. So that's kind of some of the questions I have with Cisco going forward. They're kind of one of these hybrid companies now, and I have to wonder which area is the strongest weight for them and how that will do going forward. But overall, I tend to agree with Mike. I am definitely long-term bullish on Cisco.
Yeah, I mean, there was another firm that, was mainly back in Apple. They kind of went into more consumer-oriented products and have done quite well. So maybe Cisco sees an opportunity for growth in that area.
Well, they could, and plus they're big enough to where I kind of view them as maybe not on this scale, but I hate to use the word conglomerate, but they're like a GE in that little world, if that makes sense. And that they can, if one thing doesn't work, they can go to another thing, and they're big enough to where they can do that. So if the flip doesn't work, there are other areas with which they can go, and they probably won't go belly up. But you never know.
But what was the reason for the for the big move at Cisco today? I mean, was there news that came out, or was it just technical?
There's a little bit. I believe they got an upgrade, and it wasn't necessarily an upgrade. I'm just looking on my Options Express quote detail page where I'm clicking on the news, and based upon performance, there was actually, I forget who it was.
Oh,
it was a Barron's report. It was.
Yeah. Barron's said network equipment maker may rise further due to increase in Mark Longo purchasing a flip for his wife on Christmas.
There you go. I did my duty for God and country. And
product demand and firm initiatives.
Yeah.
Initiates dividend. There you go.
I think there's a lot of interesting stuff for Flip, and maybe we'll have to keep that on our around the block segments going forward to discuss some more forward-looking stuff. I think that's going to close out the old trading block, and with that, we're going to move right into the odd block.
The odd block.
And welcome to the Odd Block. This is the segment of the show where we discuss some of the interesting and or unusual activity that's lighting up our tape today. And we're going to start off with an interesting name we've discussed a few times on the show in the past, but it hasn't come up on our radar in a while. And it came up on our radar in a big way today, and that is Tesla Motors, good old Tesla. And they closed at $25.55 today, down $4.54, down about 15% today. So they got the legs cut out from under them pretty good today. And they also, this is a name that does an average daily volume of about a little under 3,000 contracts a day. They did over 16,000 today. So there was a lot of players diving into Tesla. And the primary driver of the paper today actually was twofold. There were some downgrades coming into the stock. Well, let's backtrack even a little bit before then. If you've been watching Tesla for a little bit of a while, this is a stock that's been kind of range bound for since they IPO'd, really, a lot of it anyway. They IPO'd in the summer around June 29th, And they spent most of the summer and into the fall range bound in the 16 to 20 range. And actually, I traded them a lot back then because they were a great name for premium writers. You got enough pop for your downside. I didn't mind picking them up down in the 16 range if they did trend back down towards their lows. So I did a lot of trading with them back and forth, some verticals and some strangles this summer. I kind of backed off them for a little bit after they exploded to the upside about in November when Toyota announced a deal with them where they were going to do some joint deals on some cars, and their earnings guidance was a little more rosy than people expected. So the stock shot up from about 21 to over 35, 36 and all throughout the month of November. So it was a solid upward shot for them. And they've since come back down the other side of that slope. They started getting some downgrades last week with some analysts coming out with outright sell recommendations on them, which is even in this modern era is still a relatively rare recommendation to come out. And then also we had today, Monday, it is exactly 180 days from their IPO. So a lot of insiders, their shares are now unlocked. In fact, a ton of the float of Tesla became unlocked today. They have about 93 million shares outstanding, and 75 million of them were unlocked to be sold today. So it was off to the races to sell to sell Tesla, see who could sell Tesla first. And as you might expect, the sellers were out in force today. And also a lot of put buyers, as expected. Just a lot of activity across the board, actually, for Tesla, but the bulk of it in the bearish put buying range. Tons of activity on the Jan 25s and 26 puts. About 2,000 of each of those went up today. In a name that usually does about a little under 3,000 a day. That's some sizable volume right there. We also saw bears drifting all the way down to the Jan 18 and Jan 19 puts. So substantially near-term bears coming in, picking up 350 and 400 respectively of those. Ironically, most of the activity was focused in Jan and then a little bit in March, very little at all. It looks like a few hundred contracts went up at all in February, which is an earnings month. And then we saw some upside call sellers in March. We saw about 600 of the March 30 calls going up for, I think they were up for about $1.50 in that range. And so, yeah, a lot of bearish trading and a lot of bearish activity, not surprising. People coming in looking to get some liquidity on this name that is just getting hammered today. How about you guys? You guys play around in Tesla at all?
Well, I'm kind of with you. In the summer months, I was writing strangles on there because the vol was, slightly high. People had big expectations. They thought there was some type of movement going to happen. And there was decent premium in there. And you're right, it was range bound forever. So I was writing strangles and writing, bear call spreads.
Yeah, it was a premium writer's dream all summer. It was fantastic.
But same thing, when the news came out with Toyota and, with not knowing what the news is going to be down the road, I steered clear of it. Wish I'd continued maybe to write those bear call spreads. I've always been kind of bearish on Tesla, but when it broke that 30 level, I kind of ditched my plan and thought that, I had to look at a different company or a different strategy. But I do like the bear put buying here. I think that might be, I think it might test the bottom of that range now. I think not knowing what's going to happen here, but I think you may see some continued losses in Tesla. Sometimes people are late to the news and then they'll decide or can't pull the trigger on day one, so maybe decide to sell out their positions Tuesday through Wednesday. I don't think you'll see the bargain hunters come into this stock and try to pick it up until we get down to about the 20 level.
Yeah, 20 level looks like it would be a strong level, and it's a long ways from there right now, that's for sure.
It's interesting to see the developments on this one, but these are high-end, super high-end electric cars, six-figure electric cars. That in and of themselves has been a problem for them because there's a very finite market for $100,000 Lotus Roadsters, essentially. And so they're trying to make a sedan, and that's what Toyota invested with them for, and that's what other companies, I think Daimler might have bought a chunk of them as well, and a few other companies have bought pieces of them. And so I think their new sedan is going to be in the $50,000 to $60,000 range, which is still an expensive car. And at the same time, also, it's an infrastructure problem. There still is no infrastructure for an all-electric car. So you drive 50 or whatever, 60 miles to see family or whatever it might be. So you have to find an outlet to get back. And so that's why a lot of analysts seem to be downgrading this one. They still think hybrids are going to be eating their lunch in the near term because they're still cheaper. A $40,000 Prius is still cheaper than a $60,000 all-electric sedan. And you can put gas in it if you need to go somewhere, So that seems to be kind of the Achilles heel of Tesla right now. I saw the lead-in on the article from Bloomberg today about this activity. They said, Tesla Motors, Inc., the unprofitable electric car maker, fell the most in more than 5 months after insiders were allowed to sell shares in the companies. You can tell which way they're leaning in that article from the first sentence.
Yeah.
Isn't that the American way to have an unprofitable car company? I thought that's kind of what they were just following the mold of the previous, General Motors. Maybe they'll go bankrupt and then lose all their debt to the bondholders. And I do like the styling on those cars much better than any type of Prius or Volt or any other electric hybrid that they have out there right now. So at least they get you get to look at it and say, hey, that's a car I'd like to own. Yeah, the price is still going to be high with that sedan, $50,000 to $60,000. But I mean, there are state and federal rebates for that. I don't know. I think they're going to probably like they do with everything, extend those tax breaks, extend those rebates until the next 2 years. But the downside's got to be it's at least got to touch 20 before it's going to go back up. Look at that chart. I mean, I think just took out that low at
exactly.
What is that? 27.76.
Yeah, I wouldn't be comfortable getting back in unless they were testing the lows of their range from before, that 15, 16 level. No potential to make money until 2012. That's a long time for things to go wrong between now and then. All right, and then moving on to another one we talked about before, Mike. I know you've been active in this one. You had those nice Christmas puts in Visa come your way. I think it was last month for expiration. Well, Visa is lighting up the tape again today. Yeah, closed 70.81, up $2.08, so up exactly 3%. This is a name that does about 30,000 contracts a day. That did over 80,000 today. And for a bit of a change in the paper flow today is that the bulls are actually back in Visa. I guess they're saying that this crushing that the stock has gotten over the past few weeks, look at the chart here in Visa, my guy, it's just straight down to the bottom. They're saying that's overdone, and they were out in force today. We saw a lot of near-term bulls, actually. They picked up 1,800 of the Jan 70 calls, so these are pretty much in-the-money calls now. These picked them up for about an average of about $2 a piece. We also saw people selling the Jan 65 puts, so more bulls coming in there. Sold about 1,300 of those for about 44 cents each. These could be people who picked up some downside protection maybe in the midst of all that madness and sell-off over the past few weeks, and now are finally comfortable unloading some of that protection. And then we also saw the bullish sentiment out into February, where they picked up about 3,000 of the Feb 75s for about $1.50. And then, of course, even March, the bulls were flying out in March as well. Nearly 6,000 of the March 75s were gobbled up for about $2.10 today, and another 6,000 of the March 80s for about $1.30. So bulls across the board. Not surprisingly, the vol out in Visa is up about 8% today on average to about 28.5. And Mike, I know you were playing before you had those puts that went your way in the final minutes of expiration. Are you still active out in Visa right now?
Yeah, and this is just it's not in our core portfolio, just a smaller position, but we own the stock. And just for those of you that didn't listen a couple of weeks ago when this happened, first off, shame on you, but we were getting our collar set up for January to where we're long the stock, and we were selling an 85 covered call and then buying a 70 put. Stock was at around 77 or something along those lines, and it was the last week of December expiration. And our December 72.50 put was trading for a penny. So instead of getting out of it, our plan was to just let it expire worthless, because it would have been a wash to get out of it anyway with the commission. So we just let it sit there. And then with the announcement that came out on Visa that last week of expiration, that December put that was at a penny was then all of a sudden at close to $4. And with that being said, we got out of that for a little bit of a Mark put, a Christmas gift. And right now, what we have done also, typically when we trade collars and a reaction like this happens, what we'll do is we'll get out of the covered call side of it and then just hold the married put for a few days or maybe even a couple of weeks. And so we got out of the covered call position for January for a dime, I believe it was. And so right now we're just long Visa with a long put at the 70 level. And essentially we paid very little for that put because we're out of the covered call obligation now. And we're just going to let it ride for a little bit and see what happens. So right now, what I'm looking to do with Visa, I want to see a little bit more upside on it. probably close to the mid-70s over the course of the next week or so, and then maybe we'll look to sell perhaps an 80 covered call or an 85, just depending on what the premium they give us. I've looked at ratio spreads on it as a 1-by-2 repair strategy, and the numbers didn't quite add up in January or February for anything that I'd be looking to do. So for right now, what I'm looking at on Visa is I want to see a little bit more upside and then look to sell a covered call. Should it go higher? And if not, well, we got to put. So that's where we're at.
What if you're going to sell that 80 or 85 put, how far out are you looking? Are you looking at January or February or even further out?
January or February for right now. We have the protection in place, so I'd want to see it go until it touches 75. We're probably not going to do anything and just accept the fact that we got a Christmas gift a couple weeks ago, or a little over a week ago, and call it a break-even month for now if it stays the same.
Yeah, I mean, were you aware that they were going to announce news on that on Friday, or
wasn't aware of that specific announcement, but
yeah,
go ahead. I'm sorry.
Go ahead. I talked to some people that worked at Visa, and then they all seemed to know that it was coming out. And, I don't know if they were privy to the information or something, but it would have been nice to know that, to trade it. I mean, intraday trading, I was watching the chains on that. Man, you had a range of $3 to $30 on MasterCard and on some in the money calls, and then they were in the money puts, that had the same type of range. But I mean, it was a day trader's dream for options, in like a 2-hour span.
Yeah, it was unbelievable. And that's typically we don't typically look at announcements that much on stocks with which we're collared on. This is more of a longer term holding, and we're just doing the collars as kind of risk management with it. And I was not aware that an announcement of that magnitude was going to come out.
Yeah, where's the excitement and fun in long-term investment?
Those day traders keep guys like you employed, right, John? You got to keep cranking the darts. Yeah,
the darts, as they refer to. I mean, there's not many options that you can day trade. I mean, the Qs are a good one, the SPYs are a good one, but sometimes when you see an opportunity like this, obviously the quick buck is the riskiest buck, but sometimes there's an opportunity where you have to pull the trigger and be able to pull the trigger in a moment's notice. And I think this was one of the ones that you could have done very well on. When I watched MasterCard, I know we're talking about Visa, but American Express, Discover, they all kind of mirrored each other. What I was saying that be prepared to pull the trigger on a moment's notice when you get news like this, because when MasterCard took out its intraday low, there was two moves. It moved lower on the news, and then there was some follow through. When it took out that second intraday low, you could have picked up 5 points on at the money put in 2 to 3 minutes. I had the streaming chain up there the entire time, and if I wasn't doing my day job, I would have been flipping options on that, and hopefully done quite well.
Yeah, this is a good argument for having one of those applications like the Extend that you guys offer running during the day while you're doing stuff, even if you're not a full-time trader, just to keep those kind of alerts and those kind of things at the forefront so you can dive in and act accordingly. Those kind of situations, you don't really have time to log in to the OX website and find the trading page and do all the other stuff you need to do and to get those puts done in time. As long as you figure out how to turn off the extraneous alerts, you're good.
Yeah, the audio, that was the second thing I learned how to do, is sign in and turn off the audio alerts, because I don't need to know when 5,000 different stocks make an intraday high or low. So. No, but when you are intraday trading, a lot of the trading day is waiting around. It's a waiting game. It's when to pull the trigger. And maybe you don't look at Visa or MasterCard all the time, but when you get volatility like this, there sometimes is an opportunity, and you have to be ready to make your move.
And then we're going to close it out. I actually threw this one in here for Sebastian, because I know he's such a retail freak and a aficionado of Chico's. The man loves his retail sector. And so I threw this one in here, Macy's, just to kind of close us out with a little bit of holiday spirits. This is the name that does usually about 11,000 contracts a day, and they closed today, or they did about a little over 8,000 today, so a little bit of a lighter day actually today. And they closed at 25.16 today, unchanged on the day. This was after bouncing back from an intraday low of about 24.5, so they had dropped off a bit during the day. And a lot of this was because people were expecting the last few days of the holiday season to drive some last-minute retail activity, people going in, and using their gift cards and what have you. And apparently that snowstorm back east is really putting a damper on that. People can't get to the stores, so the traders hit Macy's in the near term. But all is not lost with Macy's because the bulls were in force in the options anyway today. We saw people looking for some new highs in the stock. Picked up about 3,400 of the Jan 26 calls. So these are still out of the money calls for about 38 cents each. And looks like they did a total on the day on that strike of about 4,200. So a lot of substantial volume of upside calls going up in Macy's right now. And these guys are expecting about a 5.5% jump by the end of January expiration. I don't follow the retail sector that often. I know Sebastian loves it. I think, Macy's is a good name for the holidays. And obviously some bulls are thinking this season is going to be a good one, and going forward going to be a good one for Macy's. What do you guys think about these bulls coming to play in Macy's?
Yeah, I know Sebastian does a lot of his shopping there, and he can't defend himself right now, so I'll just take advantage of that and say that
by all means.
I don't like you and probably Mike. I don't follow the retail sector very much. Not when there's so much going on in other sectors like energy and technology these days. But the snowstorm has affected the after holiday sales, which I know they cling to as far as people going out there on Sunday. I was out and about a little bit on Sunday, and there wasn't a soul out there. And I'm hearing the same thing today as well. Obviously with the snowstorm east, but just back in our hometown of Chicago, some slightly colder weather. But it doesn't seem like people are out there trying to get those half off and 80% off bargains that you usually see, because it's been 2 days after Christmas. They got to get ready for spring and whatever next holiday we have, Easter. Start restocking the shelves, because that's what they do now. Is go from one holiday to the next. Retail-wise, maybe they'll get a big showing from the gift cards. I know they didn't do as well on the gift cards as they did last year, according to reports. It seemed like people were trying to do more practical or more personal gifts. But maybe they'll see a resurgence here in the next couple of days to close out the year based on those gift card sales.
Yeah, I hit some stores yesterday, too, looking to see if there's going to be any of these, storied after Christmas sales, and there was nothing. It was pretty much a ghost town all in and around the Chicago and its environs. There was not much in the way of sales, and not many people out there hitting the stores, probably because there weren't many sales.
Yeah, and you had the NFC North champion Chicago Bears also were playing a game against New York, so I could imagine a lot of people might have been in watching some football.
That's true. A good thing.
There you go.
A day like yesterday. All right, and with that, we're going to close out the old odd block and move right into the express/spread block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express/Spread Block. This is the section of the show where we discuss what's going on. We get kind of a behind-the-scenes peek into Options Express land, and we look behind the curtain. We pay a lot of attention to the man behind the curtain there. And today that man is none other than John Grigas. So, John, what is going on behind the curtain in Options Express land today?
Well, unfortunately, we don't have too much to report today. I think, like the theme of the show, snowstorm out east, holiday trading, low volume. So we're seeing a minimal amount of activity today, which I could understand. People are coming off the holiday and need to digest a little bit. I'm sure that'll pick up. We didn't have any numbers on economic releases or financial numbers that came out today. The majority of things that we're hearing, we're still getting a lot of inquiries into the OXPS special dividend. I know we had touched on that 2 weeks ago, but tomorrow is the ex-dividend day for us. We still get calls on people wondering if they can buy an at-the-money put on Options Express or maybe a $15 put and then collect all this free money tomorrow. And I
tell them to listen to the show from 2 weeks ago, and they'll get the whole scoop.
Yeah, we got to get the word out on this podcast because it would save us a lot of time and energy in reiterating the same directions we've given for the past 3 to 4 weeks since we announced the special dividend. But we did, for your OXPS account holders, we did put a FAQ up on the login screen. It's been up there for about a week and a half, 2 weeks, and we was trying to get the word out there that you have to own the stock into tomorrow to own or to qualify for the dividend. Even if you purchase it today in the aftermarket, you can still qualify for the dividend, which is a neat thing that tomorrow trades ex-dividend day, but with the after-hours trading, you can purchase it in the market. Have to hold it into tomorrow. One thing that you'll see that may confuse people tomorrow is, let me take a look and see where we closed at here. I think right around 2040, but I just want to double check. So 2041. Okay, so when we open up tomorrow, we should be down by $4.50. Now, what you're going to see on the net change that may confuse people, okay, is 2041 minus, somebody tell me what that is, $4.50 minus 2041 is coming in at 1591. Sound about right?
Yep. And right now it's down it's down 63 cents in aftermarket trading. It's at 1990 right now.
Yeah, so you put why might it be down? Well, the futures might be down, there might be news, but most likely you probably have people selling it in the aftermarket thinking that they're getting out and they're still going to get the dividend, which isn't the case. But if we're, all things remaining constant, if we open up at 15, let's say, 90, okay, it'll say we're down 1 penny. That net change, I know we're going to get a lot of calls from around people saying, why is that net change only down 10, 20 cents when you're down $4.50? Well, the dividend is taken into effect and your stock price is reduced by that amount. So $4.50 plus or minus what you're up or down is what they're going to show for the net change. So we will get a lot of calls on that. It's too late to buy puts on it. I hope you didn't buy puts thinking that, hey, we're going to get this $4.50 dividend when the stock drops by that amount. The OCC will most likely reduce the strikes by the $4.50. I think the OCC memo is out there. SPX, with the holidays this week and last week, and then them changing to a weekly PM settlement, we're still getting some calls. We do have the quarterlies coming out that are out right now that will expire this Friday. The CBO as well as Options Express and the rest of the options exchanges have normal trading hours. Interestingly enough, that the exchange has a rule that when the last trading day for a tax end or quarter end falls on a Saturday for a holiday, which in this case I think January 1st is Saturday, there is no holiday. So we will be open normal hours on Friday. We get a lot of calls on the SPX quarterlies because, one, people are assuming that, like last week, we'll be closed on Friday. That's not the case. Two, that the quarterlies trade until 4 o'clock Eastern on this Friday. A quarterly SPX option is a PM settlement. So those two things are what people are mostly calling about, and also, hey, you're going to be open this Friday. And, of course, we are going to be open. Volume will remain slow this entire week. But it's a good time, to give us a call and maybe ask about some of the features that maybe you don't use very often. There's a lot of good stuff under that toolbox that probably intimidates you. The brokers are here, licensed brokers are here to talk you through it if you have any questions.
Good tips all around, Mr. Grigas. So I think with that, we will close out the old Express/spread block and move right into the interview block.
The interview block.
And welcome to the interview block. This is the segment of the show where we find some poor, unlucky soul from the options market, and we drag him onto the show, and we proceed to pick his brain for a few minutes. And today's poor victim is Phil Guzik from Morningstar. Phil, welcome to the show.
Thanks for having me.
And Phil, why don't we start off, since this is your first time on the option block, tell our listeners a little bit about your background in the options business, as well as what it is that you do over at Morningstar.
Well, I started at Morningstar as an equity analyst covering the auto industry, and then switched to covering investment banks and exchanges and started looking at their derivatives books and was thinking about that a little bit. Morningstar wanted to start doing some things with option research, and I moved over to do that. I developed our options chains and presentation of our data, the Morningstar Volatility Index, which is a open interest weighted average of implied volatility of options and market as a whole, or sectors or subsectors. And I now run Morningstar's Option Investor newsletter, or research service is a better word for it. We have a couple cash portfolios that we run, Pay Me Now and Pay Me Later. Pay Me Now is an income portfolio. Pay Me Later is a max opportunistic return portfolio. And we regularly pitch ideas, usually an idea or two a week. And it's all based on the research of our 100 analysts covering about 2,000 stocks. And I start with their research and then usually dig into the company a little bit further and then look at the option space to see where there's longer horizon option investment opportunities.
Okay, so, hey Phil, Mike Tusaw here. So when you're doing analysis on a specific stock, or when your team's doing analysis on a specific stock, you would say you're looking for the right fundamentals or technicals or whatever the case may be on the stock first, and then if it passes through that screening, if you will, then you would look for a potential option opportunity. Do I have that correct?
Mostly, a little bit further than that. When we look at a company, we look at the valuation of the underlying company, but we also look at the uncertainty around that company, and uncertainty is a measure of implied volatility. And we've actually formalized that relationship recently, so we have an uncertainty rating that's kind of a fair value, if you will, for implied volatility over longer dated options. And then based on whether we think the implied, when I start looking at it, whether the implied volatility is mispriced relative to the uncertainty of the stock, whether the underlying is mispriced, or both, we look for bullish or bearish option buying or selling opportunities.
Okay. Now, Phil, if I'm not mistaken, you have an engineering background before you got into the investment world. Is that correct?
I call it my wasted decade in the auto industry.
Okay.
Yeah,
I like
that. Now, would you say that, like, with your background in engineering, has that helped you in terms of being in analyzing fair values for options and like different areas of how the option pricing formulas would work at all? Does that carry over at all?
Well, certainly. I mean, engineering is basically applied physics and applied math. And, so an investment research is applied math. So critical thinking and ability to translate uncertain realities to quantitative relationships, engineering definitely helps with that as a fundamental analyst. And then, just the basic math skills certainly help. But ultimately it comes down to fairly simple judgment kind of relationships. And once you understand the fancy math, you don't have to do the fancy math so much.
Gotcha. So you had mentioned in your two portfolios, the Pay Me Now and Pay Me Later. The Pay Me Now, I'm assuming, is some type of a covered call portfolio, or tell us a little bit more about that.
Yeah. Pay Me Now is primarily option income, and it's the objective is to generate an income stream with limited downside risk, particularly to the cash flow. So it's covered call, cash secured puts, same transaction, and opportunistically some other things. I just recently bought a GM bond convertible, so it's got, it had a nice yield, and then there's a big upside tail that we see in the auto industry into GM, and I didn't think that was priced in the bond, so I bought the bond.
Interesting.
But it's basically income related.
So with the GM bond, do you ever strip out the convertible and trade it in the public market or anything like that?
I haven't done that. You could certainly do that, but that's definitely the way that I look at a bond is using our fundamental method for looking at the options, and then you look at the value. We have our credit research team look at the value of the bond, and you add the two up, and you get kind of a fair value for what the bond should trade for, and compare that to the price today. But we don't actually do the transaction of stripping one from the other.
Okay. Great.
Yeah, it's interesting how That is interesting. That's an interesting thought for sure. How frequently do you use the bonds within the Pay Me Now portfolio?
Oh, that's the first time I've done it. It's, opportunistically, whenever something seems like it's mispriced, we'll do whatever is mispriced in whatever portfolio is appropriate. The bond just happened to surface itself because I was doing some research on the auto industry in general, which led me to believe that there's a big potential upside tail to the auto sales in those companies, and then that started me looking for investment opportunities in that space.
Now, do you guys ever do any kind of? Sorry, Mark Sebastian here. Do you guys ever do a pay me now and pay me later type of approach?
Sure.
Or has that happened?
Yeah. Well, the issue is Pay Me Now. You're looking for a combination of. Let's say primarily it's been bullish because we've been in a generally undervalued high volatility market. So it's primarily been bullish volatility selling for the past year or so since we launched the portfolio. You're looking for high vol and undervalued if you're going to do the covered call and trying to generate income. And that doesn't often align with something that's also an opportunity to buy vol for the pay me later, let's say. So to sell the put in one portfolio and buy the call in the other only makes sense when the underlying is grossly mispriced. So something's trading for a half or a third of what you think it's worth. You may say the downside tail here, I can sell the downside vol in Pay Me Now, and I'm darn sure that I'm going to be able to generate a nice return from that. But it's so underpriced that even though the volatility is high, buying the upside tail, let's say in the Pay Me Later, makes sense as well. I've done that before, but I wouldn't say that's a frequent scenario because usually if vol is high, you want to be selling it, right? So you don't want to be selling and buying the same vol.
Right. Now, what would be an example of some of the strategies that you would use in the Pay Me Later portfolio?
The Pay Me Later, it's opportunistic. It tends to be a lot of buying out of the money leaps. Certainly not exclusively. We'll also do a strangle. Straddles tend to be a little bit pricey. Another example might be, let's say, a two-outcome biotech company like Mankind is a inhaled insulin, a drug company that basically has one product that determines the value of the company, an inhaled insulin. And we're going to hear from the FDA in another week whether or not this drug is going to be approved. They're going to ask for more info or denied. Well, the way we look at the world is as a probability distribution as opposed to implied volatility. And with a company like Mankind, you have two outcomes. One, that the stock's worth a couple dollars, and the other is that the stock's worth like $20. And the option market often doesn't price that correctly. So, I might buy both tails, buy a strangle, both the upside and the downside, or, if I have a bias one way or another, like I do in this case, I just bought the upside exposure. And basically just saying that the Black-Scholes model is still the anchor for just about every option price, but there's times when it just doesn't fit right, and this is one of those.
Understood. Well, Phil, it's been a pleasure having you on the show. Thanks for coming. And where can our listeners go to find out some more information on Pay Me Now and Pay Me Later?
I'd love to have them come to option.morningstar.com, and thanks for taking the time to chat with me.
Hey, thanks for coming on, Phil.
Thanks for coming on, Phil.
Yeah, I'd love to chat with you guys. Thanks a lot. It was great.
And that's going to do it for the interview block, and we'll move right into Around the Block.
Around the Block.
And welcome to Around the Block. This is the section of the show where we discuss what's on the horizon for the next few sessions. And since this is essentially a year-end show, we can talk about what's on the horizon for the coming year as well. And I know, John, as you mentioned earlier, the economic calendar is relatively light for the rest of the week. We have consumer confidence on the 28th or tomorrow, and PMI on the 30th. But, I don't see either of those really shaking the rafters, so to speak.
Yeah, I mean, the only thing I could really see focusing on for you commodity traders or your crude oil ETF traders, keep an eye on that crude inventories on the 29th, which is Wednesday, comes out at 10:30 a.m. Eastern. You're going to have thin markets. You're going to see some volatility around that time. Always need to be aware of your economic releases, sometimes even the foreign ones when you're trading commodities. This one here, you may see a big move. Oil's been hovering right around that $90 mark, and it's kind of poised to either make a move here, higher or lower. I would always like to think bearish, but with the way the equities are moving up higher here, you got to think that the crude's going to trend with it.
Yeah, and I know, I'm sure, like you said before, a lot of people are seeing the VIX right now as a bargain. I'm sure, of course, a lot of them are also making that old mistake of thinking of the VIX cash and not thinking of where the VIX futures are trading, and probably getting a little bit surprised when they go looking to buy some upside calls in the VIX and seeing they're a little bit pricier maybe than they thought because the futures aren't trading where the cash is trading.
Yeah, I mean, the futures are anticipating a move higher just, as, the interest rates, the futures are poised for higher interest rates. But yeah, I think the front month Jan VIX future is still above 20 while the cash, near 17.5. But it did seem to find a bottom here over the end of last week and, earlier this week. For the slight sell-off that we had this morning for the VIX to be up that much, I found that an interesting note, thinking that, hey, maybe people are coming in, taking a long position. I just don't see anything happening this week, but maybe they're getting in front of it, looking in for the first or second week of January for some type of volatility increase for the month of January.
Yeah, I'd have to imagine a lot of people are, just from the volume we've been seeing on our site and the emails and the questions we're receiving, a lot of people are looking to start positioning for a long-term uptrend in the VIX. Because I don't think anyone really sees it going much south of where it was last week, 16.5 or so. Long-term, you kind of have to lean upside, especially with the Spain circling the bowl and so many other things happening that could send us markedly higher in the coming months. I know for me, we mentioned it a little bit before. I think the first big thing that we usually watch, Consumer Electronics Show, happens the 6th to the 9th, I believe, this year. And that's where a lot of the tech companies show off their wares and kind of set the trend for the rest of the year. So if you are a trader active in, let's say, Motorola's or Apple doesn't show there, but they usually have an announcement or two during the show, maybe to offset some of the news, or RIM or some of the other names, Netflix, all the names that we talk a lot about on the show. They stand to really probably make some movements. I know a year or two ago, I believe it was Palm, when they announced Dupree, that stock took off to the races afterwards because everyone loved Dupree, and they thought that was the salvation of Palm, and the stock, I think, rallied 30-odd% or more in the month or so following the show. So there's a chance for some big movements in the first few weeks of January in some of these tech stocks, and that's kind of what we're watching, we're positioning ahead of. But maybe Cisco will make an announcement that will move the needle north a bit as well. So I think that's kind of on the near-term horizon for us, the thing we'll see maybe moving some big names in the coming weeks. What about you guys?
I want to revisit the VIX for a moment. I want to be bullish on the VIX myself. I really do. But I have to say that I don't have a position or an opinion on the VIX right now just because I want to tell a story of fall of 2008. And I was doing a presentation in Vegas. I was actually with Jim Bittman. And VIX options were the hot product back then, and they're still pretty hot right now. And the VIX was around the 39 level, I remember. It was around, I forget if it was August or September, somewhere around that time. And at the end of the presentation, and I wasn't an advisor at the time, but at the end of the presentation, Jim and I got so many questions, we almost missed our plane on how can you short the VIX? How can we short the VIX? The VIX is at the top of its range right now. It's at the 39 level. Can we do puts? And so we brought up some option chains. We showed ways with which you could buy puts on the VIX, ways with which you could do futures. And we could probably still be there right now with all the questions we were getting on how you could short the VIX. And everyone in the state of Nevada was bearish on the VIX. And of course, as we all know what happened, the VIX eventually topped out, I believe, at around the 89 level. So I hope for their sake they didn't really do those trades. And so with that, I agree, it's one of the ones to where I want to be bullish on it right now because we are kind of at the bottom of the all-time range, so to speak, but we could dip down a little bit lower. The VIX has been in single digits as recent as January of 2007, so we could go lower. So I think just in terms of my opinion on it, I'd want to see it start to come up a little bit before I jump on the bullish VIX bandwagon. And I'd want to see it go, I guess 20 is my magic number, so to speak, but I would want to see it go at least above 20 before I jumped on the VIX bullish bandwagon.
Yeah, spoken like a true technical guy. I like that. And, of course, you're right. The XPX pit when I was down there was littered with the bones of traders who said, front month vol can't go any lower. I should load up here, And then, of course, they were blown out quite quickly. So that's why I think the smarter people are positioning long term. I think if you're positioning now for a near-term Jan upside pop in VIX, you're rolling the dice. If you take a smart approach and you leg into maybe a decent vertical farther off with a farther off time horizon. Yeah, but you're right. The VIX, people do forget that the VIX was range bound in the mid-teens for a long time, for years. But I think long term over the next 6 months or a year, personally I see the probability of a higher going north from here. But we'll see. And I think if you're waiting for a bit of a surge before you dive on board, not a bad approach at all. And what about you, John? Anything else you guys are watching for the next few sessions, or some tips you want to leave our listeners with for the coming year?
No, don't drink and drive. You got a big day this weekend, right? No, I'm looking for, people like holidays, so do I, but I like to return to normalcy, so I can't wait till we get through the next weekend and New Year's Eve and start to get back into trading. It just seems like there's a pause from, about Thanksgiving to Christmas, or sometimes, the expiration after Christmas to after the New Year. I like to get back into the mode of trading in high volume, and so I'll be happy to see that hopefully next Monday.
All right, well, guys, that's going to do it for this episode of the Option Block. I want to thank both of you guys for showing up and for coming on the show today, and obviously for being on the show for this year. It's been the first early steps of the Option Block. We only launched the show a little while ago, but so far so good. It's doing very well, and we can expect it to continue to grow in the coming weeks and months. So yeah, I want to thank you guys for being parts of the show, and starting off with you, Mr. Tusaw. Anything big going on at Know Your Options for the next week you want to let our listeners know about?
No, we are in holiday mode. We'll be back to doing webinars again in the new year, and we will keep you posted on it.
Yeah, well, I guess I could mention, we will have a live event down in Dallas the week of the Super Bowl. So if anyone's traveling down there for the Super Bowl and wants to hit a live event at Options Express, we will be. It's on our website, but we will be down there the week of the Super Bowl. I'm trying to see if I can hitch a ride down there myself.
I'm sorry, Mike's and my invitations must have gotten lost in the mail to that event.
It was with your Christmas dinner invitation. They were packaged together.
Didn't you mention something about a 5-star suite in Dallas, as well as tickets to the game, and perhaps a big screen TV to watch it on back at home?
I think this is just between me and the guys upstairs, but I think they are raffling off some type of big screen TV down there while they're down there or something. You need something like that for the Super Bowl.
Yeah, Super Bowl, you got to do something like that. Can't just go empty-handed. But yeah, Mike and I will look forward to seeing our invitations in the short.
Yeah, how'd Cusick pull that off, getting something like that going?
That's what I said. I go, did you guys plan that? And they said, absolutely not.
Yeah, I remember when I was there, I remember trying to justify, I was going through my cities. Honolulu is actually, at the time, was one of the biggest markets it was within the top 100 markets for Options Express. So I'm like, Joe, how come you don't send me down to Honolulu to do something? And his response was, my wife would kill me. So I'm like, well, don't tell her, but he never did that. So, but now he's going to the Super Bowl.
Yeah, we will be down there the 4th, 5th, and 6th, I believe.
We'll keep an eye out for that then. And of course, you can find Options Express at optionsexpress.com, not a hard one to find. And if you want to hear more about any of the unusual activity or the other options news or events we discussed on the show, you can surf on over to theoptionsinsider.com, where you can find more shows like this by searching for Options Insider Radio in iTunes. And I want to thank all of our listeners who have joined us and made this show such a success this year, and we'll see you again in 2011.
Be Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated, all rights reserved.